Boom, we're live. This is Tio and the Arcane Bear. I've got a wonderful and fantastic guest for us this evening, Tyler Jenks of Lucid Investments. He's been going over doing live shows with Tone Vays, his own content as well. So make sure you, right off the get-go, check out his channel, Hyperwave. You can also find them on Twitter under Tyler Jenks as well. So make sure I give the proper shout-outs to right from the get-go. Thank you guys all for joining us this evening. I'm really excited about this. Tyler, how are you doing?
I'm doing terrific. It's a beautiful day in Chattanooga, Tennessee, sort of in the middle south of the United States. I've only been here for a short period of time. I moved here in April. I've been in Manhattan, New York for the last 30 years, basically working on Wall Street. But I retired 10 years ago and now have found myself with family in Chattanooga. And my new grandson, who's 1 year old, in about a week, and I'm the official babysitter. So life can't get any better.
Beautiful. I love hearing that. Congratulations on the new introduction or entry to the family as well. That's such a powerful thing. So before we went live here, we were actually chatting about Thomas Campbell and that interview. We were talking a little bit about metaphysics, not how I thought this conversation would necessarily start. But from that, maybe for the Bear family that haven't been able to see your chats with Tone Vays or your personal channel, tell us about your background and how you ended up in this particular space and industry.
Great. 40 years ago, basically, I was in the United States Coast Guard stationed in Honolulu, Hawaii. I had an undergraduate degree in international relations, and I thought I was going to become an international lawyer. But this was back in 1971. The Vietnam War was raging on. We had a thing in the United States that was called the lottery, in which all young men at the time, their birthdays were pulled out of a big lottery basket. And the first one that was pulled out, whatever that date was, as a birthday, anybody that had that birthday was number one. And then they pulled out a second one, that's number two. And they did 365 of those until the entire year was taken up. And then they divided it up into how many people they were going to draft into the military. And anybody that was below a certain number was going to be drafted, and anybody above a certain number, it was close. And I was close. I came out number 122, and they ended up drafting 135. So my life changed in a moment with the pull of a number out of a basket. And instead of going to law school, which I wanted to do, and then become an international lawyer, I found myself having to join the military. In this case, I chose the United States Coast Guard, and I went in as a grunt enlisted man, went through basic training, and then went to school in oceanography that had to do with meteorology and being able to tell what was going on with the weather. And I got pulled out of that after 9 months and went back into basic training as an officer in what's called OCS, Officer Candidate School. So I had to go through basic training twice in 1 year, and I was in great shape, obviously. They sent me to Honolulu for the next 3 years. And I was the executive officer of a thing called the captain of the port of Honolulu, of Hawaii. I decided I wanted to get more education, and the Coast Guard said they would pay my education if I went at night to the University of Hawaii, Manoa campus, that's aligned with a thing called the East-West Center, which is basically trade between Asia and the United States. So great professors. It fell into my realm of international relations. So I said, what the heck, I'll try it. I had never taken a business course in my life. I didn't like business. I didn't like all of that stuff. I didn't like finance. But for 3 years, I studied it. At the end of that period, I got my master's degree in business mainly international economics. And one of the professors came up to me and said, "What are you doing when you get out of the Coast Guard?" I had been recently married, didn't have any money, and I said, "I have no idea. I don't want to spend another 4 years getting a legal degree." And he said, "Come work for me. I work at a brokerage firm called Dean Witter." Back in the days, it was one of the 4 or 5 biggest brokerage firms in the United States. I had heard of it. I didn't know what they did. And I said, "Sure, I'll give it a shot." So I joined this brokerage firm, and I've been doing it ever since. So after 3 or 4 years, I set up my own company. I fell in love with this thing called technical analysis that some kids started teaching me, and the world opened up to me. For some reason, it resonated with the way I looked at the world. And ever since then, I set up another company in Boston to study mutual funds. I set up another company after that. And then I was hired by a money management firm in New York City in 1991. And I've been managing what's called institutional money ever since. Institutional money are things like big nonprofit organizations like the American Cancer Society, things like Make-A-Wish Foundation, but also everything like large unions, all the firefighters in New York City, all the bus drivers, all of the iron workers, all the marble cutters, all of the roofers, all of the just on and on and on. Communication Workers of America, American Federation of Musicians, all the actors in the United States are in a group called Actors Equity League. And they would give me big portions of their pension funds, and my company, only 18 people, would manage that using various techniques against all kinds of indexes and all the competition, all the Goldman Sachs's and Morgan Stanley's of the world. And I did that for 20 years. And my little privately held firm was bought out by a bank with 10,000 employees and 300 branches, the 15th largest bank in the United States. 10 years later, we were bought out by a credit card company called Capital One, who everybody probably has heard of. And at that time, I said, okay, I've had enough of all the bureaucracy and everything that goes on in big companies. So I retired, and I've been retired for 10 years. But I took with me a number of my clients with agreement with Capital One. I left all the big institutional clients behind because they had paid for them. And I set up Lucid Investment Strategies, which is the firm that I'm still running as of today. I still manage money for all those clients that I have been, but it gives me a lot more freedom. My main office is in Princeton, New Jersey. Been there for 10 years, but I've only been to the office 6 times in 10 years because I do everything remotely, electronically, because of these wonderful things called computers. And that brings us pretty much up to date, except how people are listening to me and Tio today. About a year ago, one of my theories that I founded back in 1979 called Hyperwave, my son called me up. He knows the system very well. And he said, "Dad, take a look at Bitcoin. I think it's in a hyperwave." And I've been hooked ever since. And then I joined up with my partner, Leah Wald, who knows all about social networking and YouTube and Twitter and Facebook. And she writes for Forbes magazine. She said, "I think the crypto world needs to hear your experience in terms of asset classes, because they don't seem to get the bigger picture of how something like Bitcoin might evolve in the future from a traditional point of view." And I said, "That sounds interesting, but don't rely on me to do anything other than sit in front of a camera and give content. And I will give as much content as people want to take in. And she said, let's try it. So in February of this year, we started this little thing called Hyperwave Channel on YouTube. And our family listened to it for the first couple of weeks. And then we went from 2 or 3 people to 10, and then all of a sudden 100, 500, 1,000, 10,000. And it proved that my partner knew what she was talking about, that there was a connection that needed to be made between this new asset class and the bigger world. And that's the role I've been trying to play.
Wow, to think that from such an abstract point in the world of what would probably be seen as a lottery that you wouldn't want to win, it actually ended up bringing you down a path that's been something that you obviously very much so enjoy. So one of the things that I'm interested in, obviously, the hyperwave. Tell us a little bit more about this particular theory of technicals, where it applies, and how many other times we've seen it in different asset classes.
Yeah, that's a great question, and it's a very simple answer, actually, that unfortunately takes a lot more detail to understand. I've been working with it since 1979, which is when I finally realized what it was. What a hyperwave is it's a subset of a bubble. Everybody knows what a bubble is, and everyone talks about it. And even in the crypto space, we all see a lot of charts of bubbles, and usually they're presented from the perspective of human behavior, having to do with that spectrum between fear and greed that causes prices to go up higher than they need to and should from a fundamental basis, and then begin to correct, and then go all the way back down usually to where they began, which we call bursting of a bubble. And over hundreds of years, people have known about these things, such as the South Sea bubble, the tulip mania back in the 1600s and 1700s. But there have been many, many other examples of bubbles. And I began getting very interested in them when I started looking at long-term charts using technical analysis back in the 1970s. And I recognized that certain bubbles fall into a new category. And I began to study those. I found 125 examples in history. The first big one was the stock market in the United States that then spread to the rest of the world from the 1920s and 1930s. Now, most people know that in 1929, there was a stock market crash, and it led to a depression that was worldwide, which then led directly and indirectly into World War II. And it's not unimportant that the beginning of that period was during the period of World War I. So there's all kinds of political implications as well as economic implications very often when bubbles take place. But just to give you an idea of what a hyperwave is, it's made up of 7 phases that are very specific. There's never 8, there's never 6, there's always 7. And the first one is the most important. And it is a phase in which the price of something cannot rise above a horizontal line. And it's always horizontal, and it lasts for years. Now, in the case of the first one, which is the stock market in the 1920s, the phase 1 line, a horizontal line, lasted from 1908 until 1922, 14 years in which the price of the Dow Jones Industrial Average could not get above 100. So for 14 years, we would go from 40 up to 100, down to 60, up to 100, back down to 40, up to 100, back down to 80, up to 100, over and over again. That's the definition of a phase 1 of a hyperwave. At some point, that will break to the upside. That ends the phase one, and it begins what's called phase two. Phase two is an angular move up that will last anywhere from 1 to 3 years, but at an angle of 45 degrees or less. When that, and what happens during the phase two is the price stays above that line. It will never break it on a weekly closing basis. So in this case, we start at the 100 level and we go up to 130 or 140. Then we come back down, but we don't go to 100. We go to the line, and then we go back above it, come back to the phase two line, go above it, back to the phase two line. It never breaks. If it breaks, that's the end of the hyperwave. In the phase one and the phase two, you don't yet have a hyperwave. It's the preliminary steps for a hyperwave developing. If phase two holds every time the price comes down, it will accelerate into a phase three that will be greater than 45 degrees. And that line is also a linear line. It's straight. It is not curved like most people think about parabolic moves. It's always linear. The phase three line will act just like the phase two line. Price will go up, come back down to it, up, back down to it, never break it. Now, here's where it starts getting interesting. In the phase two line, only 1 out of 5 will become a hyperwave. In the phase three line, 85% of all hyperwaves will continue all the way through the next 4 phases, 4, 5, 6, and 7. So all of a sudden, your probability that this thing is going to become a hyperwave goes up exponentially. Now, if you're in a phase three, 85% of the time, 8 out of 10, you are going to go into a phase four, which is even stronger than the phase three angle. It's going to be anywhere from about 60 degrees to almost 90 degrees, almost vertical. And the price will stay above that, not for years, but for many months and sometimes for as many as a year or two. When the phase four is broken on a weekly closing basis, that is the end of the uptrend of the hyperwave. And now 3 of the most interesting things in all of finance occur. You get a phase 5 crash. You get a phase 6 move back up, none of which, not a single time, out of now 385 examples, will make it back up to the phase 4 peak, ever. And then you will go back down and start the terminal move, which is called the phase 7, which will take you all the way back down to phase 1. In the case of the Dow Jones Industrials in the 1920s, that was 100. So we went from $40 Dow Jones up to 388 by 1929, a 9.5x move, before dropping all the way back down into 1933, back down below 100. We actually dropped all the way down to $44. Okay, that's the first big hyperwave. I then found about 60 other hyperwaves of individual stocks that did the exact same thing during the same period. Now I knew that something very interesting was going on, so I began studying them. And then I found the largest of all hyperwaves, which was the credit hyperwave that ran from 1942 until 3 years ago. It lasted 80 years long. And it took interest rates all the way up from the 1940s until 1979. And then it broke, and we've been dropping for 40 years in interest rates from 1979 to the present day, where we've already gone below the phase one line and now we're starting something else. So that was the biggest. The shortest ones only last about 5 or 6 years. When my son called me up and told me he thought Bitcoin was in a hyperwave, I took a look at all the pricing going back to 2010, concluded he was correct, and it was very early in the hyperwave stage. And at that point, I've spent every day since studying it. We bought into it very heavily in the phase 3 and 4 waves, which was back in the fall of last year. And we sold everything in December because the phase 4 was broken to the downside, which told me that we were on our way down to 1,000. Now, to get to 1,000, it has so far taken us 10 going on 11 months. We're about to have our anniversary of the peak on December the 19th. But we had a phase 5 break that took us from 20,000 all the way down to 11,000, back up to 17,000, which was the phase 6, and we've been in a phase 7 ever since. So on my Hyperwave channel, all this year, we kept telling people, you've got to be out of this, you've got to be out of all cryptos, because they are in the terminal phases of a hyperwave, which will take us all the way back down to the beginning. So far, that has not occurred. And we can get into the details of more in depth if we want to, but I'm still convinced that we're headed down below 1,000 before we can begin recovering again, which I'm almost certain we are going to do.
Brilliant. I love it. So for us, one of the strong indicators was the break at 6,000. As I was telling you before the show, as an entrepreneur, someone who's been invested in this space since around $90. I don't have the technical analysis background that you do. It would be impossible for me to catch up in terms of life experience. So I'm super grateful to have you on the show. So basically, what I heard was is you're kind of you're the creator of the hyperwave theory itself. Is that correct?
Yes.
So that's fantastic. Very excited. So we see the volume profile anywhere between $800 to $1,200 having a massive amount of support in the fill range. And now looking back at it, I think it's extremely important to have an asset class that's like this go back and fill the volume profile on our way back up next time. That way there's a lot more support holding us up. Because as I look back now, I see the volume profile had all these big gaps, and we're sitting on a cloud up even at $6,000. So do you think do you have any charts you could show to give a bit more of a clearer example of how some of these waves move, and then what happens next in the hyperwave process as well?
Yes, and I will pull those up. Let me just expand a little bit, because part of your first question was, have I seen other ones? What do they look like? So let me just quickly go through how I've used hyperwave. Nobody has heard of a hyperwave because I've kept it to myself until earlier this year. I'm going to be teaching my first class on it in Las Vegas in January at the Unconfiscatable conference that Tone Vays is putting on. Unfortunately, we've already filled that up. But I wanted to bring it to the crypto world first, and then just make it public in general. I've used it for 40 years, and it's helped me tremendously in my role as an institutional money manager. I was able to call the peak a week before the crash in 1987 using hyperwave. I was able to call the peak in the Japanese Nikkei stock market within 30 days of the peak at 38,800 on the Nikkei. Now, the Nikkei was an interesting hyperwave. It took 20 years to build to its peak. It started at 1,000 and went to 38,800, almost a 40x move in one huge index. At the time, the second or third largest financial country in the world. And at the peak in December of 1989, the 10 largest banks in the world were all Japanese. The value of the real estate in Tokyo alone was 3 times greater than all of the capitalizations of all the corporations in the United States. Now, that is a true hyperwave. Now, since no one else in the world knew what a hyperwave was, the only people that were able to benefit from it were those that I was managing money for at the time. And we were able to take advantage of the fact that we were beginning a bear market, which would take prices all the way down to $7,000, which I was able to call as early as 1990. It took 20 years for us to get there, and we finally did, but following all the rules of hyperwave. Then I was able to use hyperwave again for the dot-com bubbles, being able to pick the peak precisely in March of 2000, calling for the NASDAQ drop from 5,000 all the way back down to $600. And as everyone now knows, it took 15 years after that for the NASDAQ to get back to that $5,000 peak. So this is a tool that can be used by everybody, but to really understand how, why, and where, you need to understand how a hyperwave is different than a bubble and how it can give you very precise readings of where you are in price activity. Now, while we're talking, I'm going to see if I can pull up some examples for you. And while I'm doing that, Tio, maybe you want to ask some other questions.
So no, this to me is fantastic, because I think there's a lot of inherent structures in nature that generally go unnoticed. I've been a big fan of physics, although I'm in no way educated or talented enough to be like a student of such a thing. I've always been fascinated by kind of the underlying more natural reasons for these types of emotional stimuli to take place in the to begin with. So to see that you've been able to, I guess, pick out this data from the last few hundred years of I guess corrections and extensions in the market is fascinating, because we get used to, though, here's the Fibonacci sequence, right? Okay, well, this is a mathematical equation that was created by Pythagoras. Is that who it was? Anyway, so I forget who came up with the 1 + 1 is 2 is 3. It's a squared, b squared, c squared. Is it Pythagoras? Am I correct?
Yeah. There are actually 3 of them went together, but it was actually Fibonacci hundreds of years later that understood what it all meant from a mathematical and financial point of view.
Okay. Yeah, because I remember, so a lot of this stuff it's natural, right? It's inherent in what's happening in nature, and we as the human species get the opportunity to pick out that data and that information and try to make sense of what we're seeing in the terminology, with the language that we know, or I guess in this case, the mathematics that you're using to kind of define the levels of what each wave is, and then the structure that continues forward afterwards. This is fascinating to me, because so many of those older charts or these older ideas, like the Fibonacci is one of my favorite, because it's so prominent in music and in the art of color, etc. But to be able to pick out new data that we haven't we haven't necessarily seen before because stock markets are relatively new. We haven't had the ability to aggregate massive amounts of data of people buying and selling for the thousands of years, at least at this level where we have a global industry taking place. So this is super exciting. I'm really impressed, Tyler, and it's hard to impress me, I guess is what I'll say. So I'm looking forward to see the charts too. So you're saying the .com bubble, the original crash in the 1930s, the black market Friday of bond market bubble of 1987, and the Nike peak you found using these particular wave counts. Now, after the wave count completes, does it continue secondary wave extensions?
Nope. That's what's so cool about it. When you drop back and hit the final target, in this case 1,000 for Bitcoin, that's the end of the hyperwave. It no longer has any power at all. And I'm sorry, I think maybe what we will do is I will set up a series. I will pull up maybe 30 different charts, and you and I can do a second show if that's all right with you. And all we will do is we will look at hyperwaves. Right now, what I'm looking for is what I call, let me see. I've got a couple of examples I can show you, but I'm looking for one in particular that would be very helpful for everybody. Okay, let's just see. What I'm going to do is I'm just going to pull up an old one.
Okay, sounds great.
But let's plan on doing that. I apologize. I didn't put this together first, but if it works for you, we'll do another show, and we will go through all of the charts that I've just described, and maybe another 20 or 30 others, including the Bitcoin chart. I can pull up the Bitcoin chart fairly easily, which would be helpful because I can describe each of the specific phases. Let me just see here, right there. I can go like that. And then what I will do is I will do a screen share. Yeah, this will be good because this is what everybody wants to see anyway. And then I'm going to apply that. And then I'm going to make this big, and tell me if you can see that okay.
Yeah, it looks perfect.
Okay, I'm going to take off the other things, and we will just look at the Bitcoin hyperwave. This period back here had on a couple of occasions a move from the very low numbers where you were able to get in, and congratulations for that, through a couple of different small bubbles that some people believe were also hyperwaves. They are not, for some technical reasons. But what happened, for example, here is we ran up to 1,000. And this is a weekly chart, which is what is used in hyperwave. The only thing that matters are weekly prices. On this candle, we got up to 1,005. And on the next candle, we actually ran up to 1139, but we actually closed all the way down at 909. We saw that earlier with the run up in 2012, where the prices got up as high as about 800, 778. And back over here, 793. And then we went into these peaks below the 1,000 level. Okay, so I draw my phase one line at 1,000 on the on this chart. And that's why we've got to return to 1,000, because up until we broke above 1,000 and held it on a weekly basis, we were in a phase one. All price prior to that breakout was below 1,000 on a weekly closing basis. That ended phase one when we broke above it and started phase two, which is this angle here. And after the phase two, we accelerated up into the phase three. And after the phase three, we accelerated up into the phase four. And the phase four was broken the week after the peak at 19,666. I'm using Bitstamp. That is the end of the hyperwave upside this week. So you exit your trades anytime during this week because of the break of the phase four. You then have, and this is called the phase five crash. Every hyperwave has it. Then we run up into the phase six rebound that doesn't get back to the top. In this case, we only got up to 17,235 as opposed to the 19,666. And then you begin the long phase seven that can take a very long time to get to its final target, but it will get there. So basically what you're looking at is a perfect hyperwave structure, except for one thing. This particular asset class is different than every other asset class I've ever studied, because the amplitude of the move over a short period of time, in this case 10 years, was so dramatic relative to anything I've ever seen that it shortened all of the other phases, the 2, the 3, the 4, the 5, the 6, and now we'll see how long it takes us to get down to the phase 7. Now, anybody that has been following us knows that there is a subset that we call funky hyperwaves. And what a funky hyperwave is it is possible but rare, only about 20% of the time, 1 out of 5, that we don't go all the way back down to phase 1. That the old phase 3 line, in this case, this line here, is able to hold the price. And if it does and is not broken on a weekly closing basis, the hyperwave continues and can go much, much higher. I was hoping, because of my fundamental belief in the strength of Bitcoin, that Bitcoin was going to become a funky hyperwave and hold the phase 3 line. It did not. But the phase 3 line held it on 11 different occasions over the weeks in February, March, April, before it finally broke. And when it broke, we only had one other possibility of holding, and that was this line. And I will briefly draw it in quickly just so people can picture it, which is the phase 2 line. What happened is the strength at the 6,000 level which is really a range, between 5,800 and 6,000 coincided with the upswing of the phase 2 line, which was moving up at $80 per week. So for example, back here in March, the phase 2 line was down at below $4,000, but it kept moving up as the price of Bitcoin continued to bounce off of 6,000 and gave a lot of people hope that that was going to be the bottom of the move. And it gave me a lot of hope that it might be, if the price could hold above my phase 2 line. And we all know what happened, unfortunately. Unfortunately, we broke the week of November right here. And that was the end of not only the horizontal support at 6,000, but the last hope that we were going to be able to hold in a funky hyperwave. And now we're back into, there is no more support in Bitcoin all the way down to the 1,000 level. So that's more than everybody wanted to know, but I think it's important to be able to picture exactly how and why we have come to the conclusions that we have in terms of this particular asset class at this time.
Yeah, so I agree. I was looking at it. I was looking at it differently, but I'd come to the same conclusion. In our show, I was hopeful because I am fundamentally, the reason why I bought at $90 isn't because I'm smart. It's definitely because I've been a contrarian my whole life, and I've been interested in basically self-branded money that can exist outside of the controls of governments and fiat manipulated systems, etc. So one of the questions that kind of jumped up into my mind here, Tyler, was a lot of these other assets that I've looked at that have had like a uranium, for instance. Did uranium complete a hyperwave?
Yes, gold? It did. Yes, it did.
So one of the indicators that I've noticed that seems to be consistent is the futures market, the relationship to the futures market, the somewhat nearing finish of these hyperwaves, and then the moves back down to phase 1. I said uranium did it, silver did it, gold looks like it could probably do it as well, down to around $400 to $600. So my question is, do you feel that because of this type of particular asset class that there could be, or that there's a likely future for Bitcoin now because of the, I guess, the immutability to the underlying nature of it? Or do you think that the perception of value itself continues to hold sway and we stay down at $1,000 potentially inevitably or indefinitely?
Great, very perceptive and a great question. Two quick answers. One, very few hyperwaves mean that the underlying asset goes away. It simply means the hyperwave is over and now new fundamentals and technicals come into action. A great example is gold and silver. I'm a big gold and silver student. I was a big buyer in the 1970s after Nixon closed the gold window. I was in the Coast Guard, but I was buying silver because silver coins, US silver coins, because the price of silver got to the point that it was worth more to melt down the coins than the coins themselves were worth. And we noticed that in 1972, 1973, as gold was going from $35 up to $880, and silver, of course, was going from the low $2 up to $48, mainly because of the Hunt brothers and some other fundamental things that I was in the middle of. And we don't have time to go into that right now, but that's before I discovered hyperwave. But one of the reasons I discovered hyperwave was because of the silver and the gold market. I began charting them, and then a number of other things. Most of your listeners weren't aware of financial markets back in the 1970s. But for those that do remember it or have read about it, we had hyperinflation developing in the United States.
Right.
And that was finally crushed in 1979, 80, and 81 by Paul Volcker, the head of the Federal Reserve. And he did it by raising interest rates on US Treasury bonds to 15.5%. You could get in a money market fund for a short period of time 20% at your bank for a money market fund because of inflation, which was at 21%. And that's what caused gold and silver and copper and oil and OPEC and many, many other things, cocoa and sugar prices to skyrocket. Some of them skyrocketed into hyperwaves, and it was easy for me to compare the silver chart to the cocoa chart to the sugar chart and see they were acting the same way. And all of a sudden it became clear to me, okay, now I understand what's going on with hyperwaves. But look what happened to gold. After dropping for 20 years down to $250, $263.50 on the COMEX, it started another move up, another hyperwave. Many, many things have done that. The US stock market didn't disappear after World War II. It's true that it took from 1929 to 1953 before it got back up to where it used to be, just as it's taken the NASDAQ from 2000 until 2015 to get back to where it was after a hyperwave. The Japanese stock market was at 38,000. It's only gotten up to 24,000. It still has to go another $14,000 just to get where it was in 1989. What am I saying? I'm saying that hyperwaves signal macroeconomic shifts. That's when hyperwaves take place.
Interesting.
Therefore, this thing that we all study and love, Bitcoin, is signaling a massive shift in world economics. Now, your question is, what's going to happen? I am convinced that once we get to where we're going to go, that Bitcoin is going to go into another much more massive move to the upside. So I am unbelievably bullish, very long term. But my adage that people that listen to me hate hearing, because I say it all the time, is don't tell me what to buy. Tell me when to buy it, which is what technical analysis allows you to do. Don't get married to the thing that you believe in, whatever the asset is, gold and gold bugs, the US stock market, the Japanese stock market, silver. None of that matters. It doesn't matter what the title is to the thing. They all move according to our personal human instincts, which run the gamut between fear and greed, and we can't control it. But we can map it, we can understand it, we can believe in it, but only at the right time. Don't be afraid to sell things, is what I've been telling people in the Bitcoin world for the last 10 months. But that does not mean that you're giving up on your faith and your belief and your understanding of the fundamentals. But fundamentals never move markets. It's always the technicals. The technicals take into consideration all of the fundamentals. At the moment in time that price is being discovered between all the buyers and all the sellers. That's the purity of what Bitcoin's trying to tell us. It's trying to tell us that we need the entire world to believe in something and act in something and vote for something. And it's the only asset class that does that. Now, that's the good news. I believe that everything falls in place. And now I'm going to give you the bad news. What must happen in my mind is that all of the other projects that have been riding on the back of Bitcoin, all of the ICOs, all of the other cryptos have got to go to zero. And they will not and should not come back, because they have been acting in the metaphor of barnacles attaching themselves to Bitcoin. And the first 1 or 2 or 5 or 100 couldn't slow it down. The next 500, the next 1,000, the next 3,000 that attached themselves onto that concept was enough to stop the move of Bitcoin and destroy that first hyperwave. But they're still clinging on to it, even with the regulators, even with the knowledge, as people look closely into the fundamentals between what is purported to be additive to Bitcoin and the original core concept and the original blockchain, in reality are subtracting from that concept, not only fundamentally, but from the point of view of adoption for the rest of the world, because the rest of the world can't make the separation between what Bitcoin is and stands for and can do and what everyone else claims. There's too much confusion, and that includes the regulators around the world. If you and I were sitting at the head of the SEC, we would have done exactly the same thing, because we were overwhelmed with this new asset class. So we waited and waited and waited, and now sitting in the middle of it is going to be a nightmare in terms of regulation shutting down projects. And Bitcoin can't go up while that is going on. We need to clear the field. Okay, that's bad news number one. Bad news number two is there are 3 other competing possibilities to correct the situation in the world of debt and credit. The most likely, in my mind, is going back to a gold standard. The second most likely is total default on the debt. And the last one is growing out of the problem on an international basis. That's the least likely to happen, and we don't have time to go into why that is, but it would be the best outcome. But I don't see it as even a slim possibility. The default is unfortunately the most possible, because it's too difficult to get all the world powers to sit around a table and agree. Everyone agrees, but won't say it publicly what the problem is. The problem is we simply, on a worldwide basis, cannot pay the interest on the debt, or the debt that we've already accumulated. That's why Bitcoin came about. It came about because of the collapse of 2006, 7, 8, and 9, and this person, this man, this woman, this committee, this group, whoever it was, calling themselves Nakamoto, Satoshi Nakamoto, said, okay, we need to think about this whole problem differently. Here's a white paper. And that was the birth of Bitcoin. And that was the birth of the 4th possibility of taking care of this problem. It's the one that I want to see happen. I see the collateral damage from what it will cause to be the least imperative relative to the other 3 projects, except for the growth project. So the bad news is that what will probably happen is we're going to have to go back to a gold standard. All of your listeners need to read the Bitcoin Standard by Amos Saifedean, because in that it gives you the whole picture. If you haven't read it yet, please do. But there's a bit in it at the end, and I had him on my show because I was interested that his conclusion was the same as mine, that the gold standard, if it comes back, will kill Bitcoin. I believe that to be true, but I will use the word a little different than kill. What it will do is it will put it back into its chrysalis for a later date, because the gold standard itself, depending on how it comes about, will not solve the problem. It will simply put it off for another generation or two, at which point Bitcoin will again reemerge. And okay, again, too much information. But my point is that what we need as a community that believes in Bitcoin is we need it to get to where it's going to go. We need that getting to where it's going to go to greatly weaken, if not destroy, 95% plus of all those barnacles, all those lampreys, all those leeches, all those ticks, all those chiggers. Call them what you want. They're bloodsuckers that are sucking the blood away of this one thing that is the future. We've got to protect it. Let's just say 50 projects really have merit and stay around. Great. They're not going to stop what Bitcoin needs to do. Now we've cleared the field. Now people understand. Now regulators understand. Now we're in a fundamental position for Bitcoin to start moving up again. Now here's the problem. It's got to move up through adoption quickly enough to go high enough to be able to become important to the rest of the world. And I'm talking 100,000, 500,000, a million, 5 million. At those points, it becomes substantive in terms of central banks and banking, and everyone's going to have to adapt, but it will be real. It's not real now. It's real to us, but it's still academic and theoretical until we get the adoption, and we can't do that as long as all this other nonsense is going on. Okay, that's going to take time. But if the stock market in the US is beginning a bear market, that means stock markets around the world are going to be in a bear market, and that is going to cause a crisis that may or may not trigger the event that is going to require an answer by central banks around the world. And at that point, I believe they're going to turn to a gold standard. And it's not going to take them long. It only took 22 days for Bretton Woods in 1944 for all those nations to totally change the world economic macro framework and make the US dollar and gold the standard for the rest of the world. It will take much less time to do it this time around. So Bitcoin will either be in a position to be considered or it will not. And that's all dependent on things out of everybody's hands. So those are my two bad pieces of information. The good is that what we all agree is a very important asset class is getting close in terms of both time and distance to its final point where it can rest for a while and then allow other things in the world to take place.
Beautiful, Tyler. There's so many different questions that came up there, so I would definitely love to have you back on the show again to go over, especially the passion that you just brought out there, that fire. I definitely am in that same boat. I think that we're running out of choices to how we solve the problem that we're inevitably in the face of right now, in many different industries as well. You know, we've killed 60 to 70% of the animals on the planet over the last 100 years. We're losing indigenous information by droves. And we, in general, as a species, are kind of at one of this final tipping point. And I think more than ever before, it's really, like you said, the choice and the belief to do something different. So some of the other more abstract questions I think that came up along the way was, in my thoughts about decentralization of, say, money or currency, you know, we've got all these different currencies that are running around the world. Is there, and so for me, Bitcoin in my like like dreamy mind, I've always been like, okay, this looks like it could be a remittance structure that replaces the SWIFT system, something like this, which is quadrillions of dollars a year. It doesn't need to necessarily move ridiculously fast. It just needs to be really secure. And as a matter of fact, Bitcoin's already proven that it's more secure than the SWIFT system. I mean, you go in, if you've ever had to send an international wire transfer, you have maxed out at 72 characters for how long the address can be. Like, it's as bad as DOS or something. So we know that Bitcoin from the infrastructure layer is better than the SWIFT system. Now, I guess that also leads me to the other question, or to where the question was, is does decentralization require multiple versions of this, especially since we know that to some degree, the more we create, the harder it is to manipulate. Like, it's a game of whack-a-mole to try to stop, because we know that tyrannical governments have often been in favor of large-scale censorship, stopping not just information and media, but also funds. I mean, we saw in India, we no longer accept the $1,000 note. You had lineups around the streets. People were dying. Family members would go without hospital care because they no longer accepted a note that families had saved for 15 or 20 years. So I guess part of my question is, does decentralization require more than just Bitcoin as well, but not from the remittance structure, more from like a cable of commerce to be able to interact? And so, for instance, I can choose like Ray-Ban sunglasses, right? And I'm like, oh, Ray-Ban, this is great. I like the brand. I like the company that's behind this. It's more of a personal choice, whereas we haven't had the opportunity to make a personal choice in, say, the brand of the money that we use. So I guess I'm trying to define my question here. Do other decentralized technologies similar to Bitcoin create the infrastructure to have global commerce where people can actually choose the brand of money that they want?
Yeah, that's the $100 trillion question. And we don't know that, because what we're talking about is what is the reaction of the powers that be, not only central banks, but political systems around the world. What's the reaction going to be? What we know for a fact is that any sort of centralization of any other project, defined as one person, one group, one committee, one corporation, one board of trustees, one decision-making body, or several for a project, is inferior to no corporation, no person, nobody that can change what is happening with the technology. If you don't have a person, then you can't fork. If everything is done according to the white paper and nothing more, then we know we're going to stay at 21 million. We know that there is going to be a finite amount in any other project. By definition, if there is someone in a position to make a decision, that means even though they don't make that decision on day one or year 5, they are in a position to make it, where they say, we need to go from 21 million to 42 million. You can't do that with Bitcoin. You can do that with every other project. Okay, that's step number 1. Step number 2 is, when you start bringing in the other players that are already in the space, central banks, banks in general, where you try to partner with them and say, let's build a token that you can use to do this. And by the way, we have that token. Me personally, these 3 guys, this group.
No name specifically. Sorry to interrupt. No name specifically on what that project might be.
It doesn't matter, because we could name hundreds and hundreds and hundreds of them, some of which the people that put those together took the money and ran, some of which pre-mined and had this pot of money that they spent on doing other things. That's fine in the business world, but that's not what we're talking about. We're not talking about brilliant people putting together brilliant ideas to make a lot of money for themselves and their companies, and maybe for some other people. We're talking about basic principles of a standard of finance for the world. And any one of those other things confuses the rest of the world, so that now we've got the EU saying they're going to come out with their own cryptocurrency. The Federal Reserve has even thrown around the idea. Brazil has thrown around the idea. Venezuela has thrown around the idea. Russia has thrown around the idea. China. What do you think that means? Do you think that this experiment can possibly work if you're going to let centralized groups get in on the action? Absolutely not. Cannot happen. Now, on a practical side, that's the way it's going to have to develop, unfortunately. But every one of those developments, until it's crushed or the world financial situation does not accept it as a solution after years of experimentation, the only thing left standing is going to be Bitcoin. And I'm not so worried about who makes money and what's the good time to buy this and that. That's all interesting. But to me, we've got to go back to the overarching problem. Am I correct? Is your intuition correct? Are the listeners' intuitions correct that there is a problem out there that has never existed in human history? That we've built a structure of banking and money and currencies and finance that has gotten out of control so that mathematically it must fail. I believe that to be true. And that's what this discussion is really about. So I am a maximalist to the maximum degree, because I think anything else is going to exacerbate the problem, not help it in the end.
Interesting. I really appreciate that. It's such a fascinating topic, because I agree with you. We're seeing the beginning of the realization that no matter how far you try to fire a jet into the sky, inevitably it will fail and stall and come crashing back down.
Beautiful. Yeah, exactly. It's that simple. It's that simple, that we live in a finite world, and in a finite world there is no infinite. That's why on Wall Street they say trees can't grow to the sky. There's a limit on how high a redwood or a sequoia will grow because of material limitations. In a rocket ship, it only holds so much fuel. When that fuel is spent, it can't go any higher if there's still a gravitational force that's going to pull it down. In finance, there's only X amount of money on anything. And that money, if it's going into one thing, is not going into other things that causes them to fail. That's the whole principle, not only behind what a hyperwave is, but everything you need to know about asset classes and investing, is that it all gets down to you and me and how much we have in the form of value to take out of our pockets and to put into something. And when that is all gone, what has just happened is all of demand has been reduced to zero, and all that is left is supply, and the price goes the other way.
Yeah, very, very interesting. I love it. Again, we had put the targets down near 800 to 1200, and you're just giving me even more confidence that the support, I accidentally said yesterday, like a hot butter through knife. Obviously, that's not what I had meant, but we've been cutting through these layers of support, or what appeared to be layers of support, so easily that as soon as we broke that $6,000 mark, I became extremely bearish. Something that I don't want to do. I didn't want to do that. I didn't want to see that. Like, it doesn't feel good. There's a lot of hope and integrity built into this structure that we can empower individuals to choose a brand of money that's not government created or I guess by the definition of fiat to some degree forced for you to choose to use because there's no other option. So there's this is really interesting times. And we, as you said, we're seeing the stock markets likely entering a bear market. They look pivoted to go in the downwards direction. And most of the time it does. I think that's why the dollars went up around 1% the other day, is because people don't know where to go. And they're playing the zebra card, which is let's move with the herd, because otherwise you might get eaten by the tiger at this point. And it's sad that fiat has everyone's attention still, with how many problems there are. People don't realize that fiat is like a terminally ill cancer patient, and we already have the medicine, and it's been diluted a little bit, right, in part of the conversation of trying to show people that there's a medicine that exists. But they keep going out to party, they keep drinking, they keep smoking. It doesn't seem like there's an end in sight. Now, so one of the factors that I wanted to ask a question on again, and we'll cut it down here so we can do another show. I'd love to have you back, especially as the time progresses, to see where we go in the future. But what I've noticed is the countries that are adopting are places that have already realized that there's terminally ill problems with their governments or the banks. Places like Venezuela. Like I remember when I bought the first Bitcoins at $90, it was just a few weeks later that the bank runs in Cyprus happened. And that's when we went vertical all of a sudden. It was the realization of the perception in people's minds that their value had been taken from them by the governments and the banks. So I guess part of my question, Tyler, is do you think that the collapse might be something that starts to either push people into riots like we're seeing in France, and then from there potentially finding the realization that there is a solution to these problems? Or do you think the likelihood of these conversations is leading us back to the same problems that we had originally had, which is people still for some reason trust governments or the banks inherently to begin with? And then I guess the third layer of that, because we started off the conversation and we'll kind of end it with this too, is as fans of Thomas Campbell, this idea that the quantum layer of observation between participant and what's actually happening in the storyline are so like almost intrinsically related. Does our perception of belief change this story? And if so, like we're essentially part of the reason why this can be successful, is because we're sharing the importance of this technology to the future. So now that's kind of a kind of a layered question, but what's your feelings on adoption through countries that are hitting critical failure points? And then does this story go the way that we want it, just simply by our choosing of the perceptual value?
Yeah, I'm certainly not smart enough to answer that, nor is anyone else. But what's important about the question, I love questions. When I was a teenager, I knew what my epitaph was going to be. My epitaph, I hope somebody will do this for me, is he never even knew the question. And to me, it's not the answers, it's the question. And you just frame the question beautifully. How does this play out? And I'm not smart enough to answer that. But what chaos theory tells you is that anything you believe is going to happen from point A to B might, but don't take it from B to C. And the whole butterfly effect. What we're seeing is the flapping of the butterfly wings in Malaysia that will cause the hurricane that comes from Africa to the United States. But being able to make that prediction is impossible. So let me just try to generalize and say that, yes, each individual small case of Venezuela or Argentina or Turkey or Greece or Cyprus is the flapping wings of a butterfly. The hurricane, when it comes, how it comes, and even on what continent it begins, is unknowable. But that it will occur is knowable. So what we must do with the knowledge of what the problem is and the 4 possible solutions is watch each of them carefully and move with them to protect ourselves, our families, our friends, our clients. And that's the process we're all in now. And you are absolutely right. The way to do it is share what you know, share it with other people, refine it, gain knowledge, give knowledge, but focus on the problem and the solutions, and we will all get there.
I absolutely love it. That was a very well-rounded answer to a very, very broad stroke question. So I appreciate your time tonight, Tyler. I would love to do this again, especially as we start to see the future unfold. For those of you, again, that haven't seen Tyler's show before, check out Hyperwave on YouTube. You can find them on Twitter, and on I'm sure there's a few other places as well, but that's where I found you, was on Twitter and YouTube. So make sure
to tune in. Throw in one real quick one also. Yep. LucidInvestmentStrategies.com. LucidInvestmentStrategies, plural.com, is our website, and a lot of this stuff is on there. So thank you so much. I really enjoyed it. I will come back in a second because I love your perception of where we are and where we're going.
Tyler, thank you so much. I will leave the links for lucidinvestmentstrategies.com down below. So for anyone that's interested in just listening, you can find those in the links in the description. We will also do one more shout out for you, Tyler, on Twitter, sharing all these links, the video as well. Again, such a pleasure. And I really, again, I want to just take in that last sentiment there, that so, you know, if the hurt, I don't know why recently, but so I'll share this last part. I didn't realize 2 or 3 years ago that one of the reasons why zebras are black and white is not because they're trying to blend in with their natural habitat. They simply try to blend in with the herd. And I've been reading a lot of Sage, or the Letters of Seneca by Marcus Aurelius, and there's a lot of sentiments about we want to remain who we are, which makes us different from the many. But if we're too different from the many, we won't have any effect in the way that the herd actually moves. And so it's been I'm really trying to take in the sentiments there, because what's safe for all of us and to protect our families as we move forward through this might be very abstract. So again, I love the sentiments there, Tyler. Very deeply grateful. Give us those thumbs up, ladies and gentlemen, if you like this content. Remember, again, to subscribe to Tyler's channel, and we'll see you guys on the other side.
Great. Thank you very much.
Ciao.